Okay. All right. So, as you all probably remember, because it's still pretty fresh, about 6 weeks ago, we had a big banking scare led by SVB Bank. And it really riled the markets and riled a lot of confidence. And a lot of people were heading to the banks to start pulling their money out, which is actually a good idea, by the way. Number one, reduce your exposure to your bank. Number two, put some of that money into gold and silver. Number three, establish streams of passive recurring income. Okay. Well, look, it's not over. We talked a lot about the contagion effect inside of the banking industry. Remember, all of these banks are intertwined. They all own each other's debt on their books. And where a lot of people feel like they dodged a bullet there after SVB Bank. Okay, the government came in and they backstopped this new bank. They backstopped SVB. So we're all good now. Well, I'll tell you what, we're not all good. And back then, I was telling you that there are going to be other bank failures, and they're going to come pretty soon. And when they happen, just like SVB Bank, they're going to happen fast. Okay, you're going to wake up the next day, and you're not going to be able to get your money out of the bank, or things happen fast in today's markets. So let me show you a couple of quick clips. It takes about 2 minutes describing the newest bank scare.
Now I am the master.
Oops, wrong one.
New concerns from the financial world. First Republic, a well-known regional bank, saw its stock drop nearly 50% yesterday after announcing a recent $100 billion drop in deposits. Now, this despite the billions it received from the nation's largest banks during last month's banking turmoil.
And this is about mortgages. This is about long-dated securities. Is this about stopping FDIC taking it over?
Yeah, absolutely. We've known for a while that this is something that the bank, its advisors have wanted to avoid. They can find another solution as they believe it. And now we are learning over here at Bloomberg that they are exploring divesting $50 to $100 billion worth of those long-dated securities and mortgage as part of this rescue plan. Remember, when we looked at First Republic, which is down 30% on the day, about 90% on the year, certainly in dire territory here, loans at the end of the quarter were $173 billion, but deposits were $100 billion. There are a lot of concerns about the strength of the balance sheet here.
You're seeing a lot of the pressure, worries about the banking sector, with shares of First Republic Bank ending the day down some nearly 50% on the day. The stock nosediving after reporting first quarter results after the bell on Monday. The bank reporting a precipitous drop in deposits of over $100 billion, less when you account for the rescue funds it received from the nation's biggest banks. Doesn't matter today. Still significant. CEO Mike Roffler saying in the company's earnings call that the bank faces, quote, challenges and uncertainties, that's an understatement, is looking for ways to shrink its balance sheet, Dave.
Boy, it is ugly. You see the shares down about 50%, and you really see a flight away from this bank. Look at Twitter. Every other tweet is about the panic there. Short interest is nearly tripled now.
Okay, so listen, technically, First Republic has not failed yet. Okay, so they are still around. They are still trying to figure something out. But, there's the old cockroach theory, right? There's never just one problem. And we have all the proper people coming out, all the right people coming out defending, there's nothing to worry about. We've heard this before, nothing to worry about. But the things that are going on at the bank is the exact same thing that happened in 2006 and 2007, just prior financial crisis. Same exact thing is going on. Now, I promise you what's going to be happening here is all your CEOs and all your CFOs at every bank around the country and the world, they're all getting together and they're trying to figure out what to do, because with the large spike in interest rates lately, everyone's balance sheets are suffering. And in the next big quarterly earnings report, we're going to see a lot of bad news coming out of the banks. So around this fall, start looking for the next really big wave. But in the meantime, you're going to start seeing every bank starting to cut access to credit. Now, I'd like to hear from some of you in the comment section below. Can you let me know whether your banks have lowered your credit limits on your credit cards and maybe access? Maybe some of you out there are builders. Maybe you're a house builder, home builder. Have they been starting to cut back on your credit limits? People, have you applied for a mortgage lately? And they told you, well, rather than 300,000, we're only going to give you 200,000. Have you been seeing that? Could you let us know in the comment section below? Because I promise you that is what's already going on. They're already reducing access to credit. And you know what? That's how banks make their money. Remember, banks, they pull their money out of thin air. They don't have, when you deposit your money in the bank, it goes right out the door in the form of loans to other people. Remember, up until prior to 2019, banks were required to keep 10% in reserves. And now it's zero. They don't have to keep any of it. And it goes right out the door. Remember, any money you put in the bank is legally not considered your money. So that's a very important thing to remind you of. So that's a scary prospect. You are an unsecured creditor. So if that bank were to fail, you're not first in line to get your money back. You're like fourth or fifth in line. All right. So if you think that you have money in the bank, no, you don't. It's not your money. As soon as you put your money in the bank, it's not your money anymore. It's their money. So I'm always amazed how many people, aren't aware of that. So this banking credit, the reason why I bring this up is to emphasize the importance of everyone to pay attention to this and know that when these financial crises happen, they happen fast. And they usually happen too fast for you to do anything about it. So you have to be proactive. Rob, you want to chime in here and give me your opinion on what's going on in the banking system? Do you think that we are as solid as the regulators insist? All right, so Rob, listen, the real news about this First Republic Bank is not what people think. It's not the fact that, okay, the stock is down 50%, in one day, and that the company is on the skid. The real news is whether or not the government is going to end up backstopping this guy. That's what everyone's waiting on. And
yeah, that's something that I couldn't help but think about that when you were showing that report, that news report. Companies fail all day long. There's thousands of companies that will go out of business today, and it really doesn't impact the economy or make anything go away. But the thing that I kind of took away from that report that you showed there in the montage of news reports was all of that. They're talking about billions of dollars, billions and billions and billions of dollars. And when companies go broke, they don't lose billions of dollars. They lose millions of dollars, maybe hundreds of millions of dollars, but it's very rare that a business will go out of business and lose billions and billions or hundreds of billions of dollars. And that's how it has such a wide impact across our whole entire society. But it's not that causes it, because people lose money all the time.
Well, see, there are real optics involved here. Okay, so the government right now, after what they did with SVB Bank, they backstopped them, creating a moral hazard. So now everyone thinks, oh, well, I don't have to worry about my $250,000 limit on my FDIC insurance because the government is there to backstop me. Even though I've got $10 million in that one account, which is idiotic. But
Ed, sorry, before you go on, can you just explain moral hazard for people that don't know that term?
Yeah, the moral hazard is it's rewarding bad behavior. Okay, so when
sounds like our entire society is a moral bloody hazard.
That's right. Well, I got away with it once, and then I feel free to do it again. Well, he got away with it, so why not try it myself? So it's and so the moral hazard that they started with the SVB Bank is there are many accounts there. Most of the accounts have much more than that $250,000 limit. A lot of the accounts had $10 million plus in it. SVB Bank, this is a bank for the elites. This is a bank for the really rich people. And a lot of these accounts were Chinese owned. The CCP had a lot of bank accounts at SVB Bank. And that's a whole different scandal. But Janet Yellen was asked in a congressional testimony, so does this mean that my bank in Oklahoma is going to get the same treatment as SVB Bank? And what was the responses?
If maybe, wasn't it was the super majority? That's
right, the super majority. Well, if and the super majority, whatever the hell that is, super majority is whatever Janet Yellen says it is. All right. So so she said a systemic risk. If we deem that there's a systemic risk. Well, but now, okay, so now I think that there is an imaging problem going on with the banks. And the government might be tempted to use First Republic as kind of a cautionary tale for everyone else. Say, you know what? No, we're not going to bail you out. They're going to try to sound tough. Yeah, see, we're tough. They're going to beat their chest. Yeah, we're going to be tough. You know, you're on your own. You know, that's capitalism. So I think First Republic might be a victim of optics by the government. You know, so now the exact same thing happened, by the way, in 2005, 2006, when banks were starting to have the exact same liquidity issues. The federal government said, "No, you're on your own," until the large banks got affected, and then it became a systemic risk. And then they gave them all the money they wanted. They made them take money, even though some of them didn't want the money. They made them take
isn't
it.
Yeah.
Yeah.
Can I raise something there on that historical point that you made? So in the book that I'm reading, it's called The Death of Money by Jim Rickards. So he talked about how as we move forward, warfare, unrestricted warfare, the Chinese philosophy of unrestricted warfare means it's not just a shooting war in the battlefield, it's everything, including economic. And one of the things that he does right at the start of that book, it's actually super interesting. You'd really like it, Ed, because it's about the stock market. So he goes back and joins the dots of 9/11. So 9/11 happened. There was 14 or 15 or 16 terrorists that crashed those planes, right? And there's this reporter in San Diego interviewing this FBI agent, and she says to him, "So were there other people involved?" And he said, "Well, yeah. What do you think I'm doing investigating here?" And anybody with a brain in their head would know that these people couldn't have killed 3,000 plus people on one day without some help. And all of a sudden, it's like, he said the quiet part out aloud. He spoke the unspoken truth, right? And I really liked that part of the book. And so the way Jim Rickards ties that back, and it must have been the little spark that ignited this for him to write the book, to actually, and it was part of what he did. So he worked for the CIA, and he worked for the CIA in money laundering. And what they did is they looked at all of the financial transactions in the lead up to 9/11. And what they found was there was these people in Saudi Arabia that were creating put options. So if you don't know, a put option is putting down. So you're betting on the price going down, and a call option is picking up. So think of it old school telephone. You're putting it down or you're calling it up. So when you're putting a put option down there, it's saying that the price is going to fall. And they said these terrorists couldn't resist that. They knew that this was going to happen. They were going to crash these planes and the airline stock was going to tank. So they put these put options there. So anyway, they figured out that, as they said, they couldn't resist. And over the subsequent 4 or 5 years, they created a program to detect insider trading. And at the time, the SEC never had algorithms or anything like that to detect insider trading. Because what would happen is typically someone would come along and write a series of put options on something, and then someone else would go, "What's he writing over there?" Because you can see it, right? Because they go into the market. "Oh, what's that? I better do that too. I better do that too." And you always talk about the stock market being humans. And when we talk about option transactions and somebody having to write those options, that's quite different to high frequency trading and quite different to algorithms. Even though algorithms exist over there today, back in the day, in the early 2000s, that stuff didn't exist the way that it did. And so what they were trying to do was to use the stock market to identify when the next terrorist attack was going to happen. And they had all of these inputs coming in. So if there was a report about someone putting a whole lot of put options on Carnival cruises, then the FBI and the cops and everybody would go and look at Carnival cruises. "Oh my God, is there going to be a terrorist attack?" Or if someone's putting all of this stuff on Amtrak or some sort of public infrastructure and they're putting these put options on there, they use this program. And they created a dashboard that kind of sounded the alarm. It was like a stoplight. It was red, amber, or green. And they could look up at the board and they could see quickly that, hey, that is red. We need to investigate that now. But the strange thing is, after about 5 or 6 years of this, actually, they spent a long time putting this together, right? So the software engineers, algorithm people, external parties coming in, it worked, and it actually stopped the terrorist attack. Yeah. So someone was going to attack another airline. I think it was United Airlines or something like that. Don't quote me there, but I'm pretty sure it was from the book. But they stopped that. They actually shelved the program. They put the program on the shelf. We don't need it anymore. It's like, what? What do you mean you don't need it anymore? And there's a really really strange thing because they went through all of this effort to actually try and stop something like this, and it went away. So my question to you, Ed, is like based on what these people know, because they're really smart, surely there must be some early warning signs here because this thing was designed to spot insider trading. And what you're showing us here, you're sounding the alarm with the early warning signs. And it's not just about the stock price crashing. So that's the kind of one piece of the puzzle. The next piece of the puzzle is the FDIC going to actually look after these people and bail them out? If the answer is no, then what do you do as the next step? That's like you're getting ahead of this curve. You're anticipating what's happening. But what can a normal person do? If they had money in that bank, you'd get it out of there straight away, right?
Well, yeah, that's what everyone should be doing. That's been one of our primary messages here for forever. Is number one, reduce your exposure to your bank. Number two, get some of the money into gold and silver. Number three, establish streams of passive recurring income. 3 easy steps that everyone can do and everyone should be doing. I mean, why would someone have a substantial look? I keep like 1 to 2 months worth of bill paying in the bank. That's it. I mean,
but what if I've got like 400 grand in the bank? What would you suggest? Would you suggest like pulling 400 grand out and putting it into gold and silver? What if I need to liquidate that quickly? You know, what if the gold price moves against me? There's like other risks that are associated there.
Well, what if some major event happens and you want to get your money out of your bank fast? You have 400 grand. You know how long it's going to take you to get 400 grand out of your bank?
We could do a bank transfer relatively quickly.
Oh, okay. I suppose, but what are you going to put it into?
Well, that's the problem, right? I guess, you know, and then going to buy $400,000 worth of gold and silver now might be a bridge too far for some people.
You know, and you try to withdraw $400,000 in one shot.
No,
all sorts of red flags are gonna be popping up. You can get all sorts of people knocking on your door asking you, see, you got to plan ahead. You know, you got to
Janet Yellen's coming to your house, man.
Yeah, you got to start lightening up, ahead of time. But what's the advantage of giving your money? Are you there for the enormous interest rates that they're giving you? Is that any money you're sitting in the bank? It's a guaranteed loss on your money.
I just think of like normal people, right? So you and I are not normal because we're into investing, we're into, building businesses, we're trying to create, multiple streams of income, but most people just have a job. And if mum and dad are working and 2 people are working in a normal regular family, he's earning 150 grand and she's earning, maybe a bit less because she's looking after the kids or whatnot. Together, combined incomes of $220,000 a year. That's fairly average here in Australia. Yeah. That's kind of what it is. Our wages are high. Our cost of living is high as well, but we get good wages here in Australia. So when I look at it, I think, it wouldn't be beyond the realms of possibility for somebody that, has got their mortgage under control, got their bills under control, and they live within their means to have, $50,000 to $100,000 worth of cash in their account for a rainy day. And FDIC, that's going to ensure that because it's sub $250,000, but only to a point. There's no guarantee that that's going to work because for every dollar in the bank, they've got less than 1 penny to actually insure you. Here in Australia, the banking system's a bit more robust, and I think we're kind of a bit more protected than you guys are there in the States. That's because the banks have to actually have the money in reserve as well. So for whatever amount they have on their books, they have to have that amount equal to cash. I think 4 times that amount equal to cash or something like that. So it stops it from happening.
Listen, if the person in that scenario has confidence in their bank, go with God.
That's what it is, right? That's what it comes down to, the C word.
That's right. The banking system is all built on one word, trust.
That's what the dollar bill is, right?
That's right.
That $20 you give to me, that's the promise, the trust that I can redeem that for something else.
That's right. But trust can be unraveled pretty quickly, especially in these days in the world of social media. I mean, one of the reasons why First Republic Bank was down 50% at the open, because, social media, they were screaming when SVB Bank news came out all over social media. So it's not like the old day where people got the news off the television and people are much more, news is out so much faster these days. So if a stock can go down a little bit, it can go down a lot. Okay. It could absolutely lose 50% in value overnight, like First Republic just did. It happens all the time.
I think the Jim Rickards methodology that he says, the CIA were so worried about another terrorist attack that they built this dashboard, this stoplight system. I think you need to, one thing that you need to do is to have a stoplight system for yourself as well. And really the first step on that run in the ladder is just keeping your ear to the ground in the banking sector of the stock market in your part of the world. And if you see, you're kind of looking down and in at your part of the world. Here in Australia, the banking sector, it's not going to happen like it does in the States. But I need to look up and out over the pond in the US, because if it happens over there, there's...
Give me all your time tonight. Promise I'ma make it right. We don't gotta talk too much. Just sit back, enjoy the ride.